Ever wondered what powers Singapore's ultra-fast internet? Behind every video call, every online game, and every smart city initiative lies a critical piece of infrastructure. Today, we're diving into Netlink NBN Trust, the sole owner and operator of Singapore's nationwide fibre network. It's a company that plays a vital role in the nation's digital future. But what is it exactly? And is it a good investment? Let's find out. Just a quick break here to say welcome to all our new viewers. If you're just joining us, this is Your Money Your Way, and we'd love it if you hit that subscribe button and give us a thumbs up so we can keep bringing you more helpful content. Now, before we move on, a really important note. The content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. Alright, let's get back to it. Netlink NBN Trust isn't your typical internet provider. Instead, its primary business is owning, designing, constructing, and operating the passive fibre network infrastructure across mainland Singapore and its connected islands. Think of it as the pipes and wires, the essential physical layer. They operate as a wholesale provider. This means they lease their extensive network, including ducts, manholes, fibre cables, and central offices, to various telecommunication operators. This ensures open and equal access for everyone in the industry. This infrastructure forms the backbone of Singapore's nationwide broadband network, a key government initiative to boost economic competitiveness through widespread ultra-high-speed broadband. Netlink is structured as a business trust and is listed on the Singapore Exchange. Now, let's look at the money side. Recent financial performance shows a mixed picture. For the fiscal year 2025, Netlink reported a slight decrease in overall revenue to $407 million, a 1% drop year-on-year. This followed a small 1.9% increase in fiscal year 2024, where revenue hit $411.3 million. The main reasons for the recent revenue dip were lower income from ancillary projects due to fewer work orders and a $1.5 million reduction in connection revenue after a price review by the regulator, the Infocomm Media Development Authority, or IMDA. However, growth in connection numbers and higher revenue from other services like co-location and installations partially offset this. Profitability also saw a decline. Profit after tax for FY 2025 fell by 7.6% year-on-year to $95.4 million. EBITDA also decreased slightly. Despite the profit decline, there's good news for income-focused investors. The distribution per unit for fiscal year 2025 actually increased by 1.1% year-on-year, reaching 5.36 cents. Netlink offers an attractive dividend yield, recently around 5.79%. However, a key point to consider is the dividend payout ratio, which has historically been very high, even exceeding profit and free cash flow in prior periods. This raises questions about the long-term sustainability of these payouts if profitability doesn't improve. Financially, the debt-on-equity ratio has risen to 32%, indicating increased leverage. While cash flow from operations was $258.7 million in FY 2025, the high payout ratio compared to free cash flow in the preceding year is a concern. Looking ahead, Netlink's future prospects are strongly linked to Singapore's digital ambitions. With already high internet penetration expected to rise further and a strong focus on digital transformation, the foundation for continued broadband usage growth is solid. The rollout of technologies like 5G and the increasing demand for higher bandwidth connections, potentially up to 10 gigabits per second, are expected to drive upgrades and expansions of Netlink's network. Significant opportunities also exist beyond homes, in the non-residential and non-building address point segments. NBAP connections support vital infrastructure for wireless networks and smart city applications. However, the regulatory landscape remains a key factor. Decisions by IMDA on pricing and allowed returns can directly impact Netlink's revenue. The current regulatory return is set at 7% until March 2029. So, what are the potential benefits of investing? Firstly, Netlink benefits from a stable and resilient business model due to its monopolistic position in the residential fibre network. This provides predictable revenue from long-term agreements. Secondly, it offers an attractive dividend yield and has a history of consistently delivering payouts. The trust aims to distribute a significant portion of its cash flow. Thirdly, it's well-positioned for long-term growth, aligned with Singapore's digital economy and smart nation vision. Finally, it has received recognition for investor relations and sustainability, indicating a commitment to transparency. But there are also risks to consider. A major concern is the sustainability of the dividend due to the historically high payout ratio relative to earnings and cash flow. Regulatory price reviews by IMDA can negatively impact revenue if tariffs are lowered. While it's a monopoly in residential, NetLink could face increased competition in non-residential and NBAP segments from players like StarHub. Rising interest rates could increase debt costs and impact profitability. Like any network operator, it faces operational risks and the threat of cybersecurity incidents. Recent news includes the full-year FY 2025 results announcement in May 2025, confirming the DPU increase alongside the revenue and profit declines. Analyst sentiment is cautiously optimistic. As of May 2025, targets from firms like DBS Research, Maybank Research, and UOB Kay Hian suggest a buy rating with targets around 97 cents to 98 cents SGD. TipRanks indicates a strong buy consensus with a target of $1. However, Phillip Securities maintains a neutral rating with a target of 87 cents. The stock price has fluctuated but generally stayed within its recent range, showing a modest increase over the past year but underperforming the broader market. Before making any investment decision, here are some key factors to consider. Valuation. The current P/E ratio is higher than its historical average, suggesting it might be trading at a premium. Dividend policy and sustainability. Carefully evaluate if the attractive yield is sustainable given the high payout ratios. Regulatory environment. Understand how IMDA's decisions can impact its financials. Competitive landscape. Be aware of potential competition in non-residential areas. Financial health. Monitor debt levels, although the trust currently has comfortable debt headroom. In conclusion, NetLink NBN Trust holds a unique and stable position as the foundation of Singapore's digital infrastructure. Its attractive dividend yield appeals to income investors. However, this must be balanced against risks like the sustainability of that dividend, regulatory pressures, and potential competition in certain segments. While aligned with Singapore's digital future, investors should thoroughly assess its valuation and financial health. Investing involves risks, and it's crucial to do your own thorough research. What are your thoughts on NetLink NBN Trust? Let us know in the comments below. If you found this overview helpful, please like this video and subscribe to our channel for more insights into companies and investments.